I'm Abdul Erumban, Senior Economist at the Conference Board, and this is your Economic Watch brief for emerging market for February. Skepticism about global growth is widespread among business leaders, and emerging markets are not an exception. The Conference Board's leading economic indicators for India and China suggest that the loss of momentum in growth may have been halted for now. LEI growth has slowed in Brazil and remains in contraction in Mexico. Together, these indicators suggest that 2019 will feature a moderation in emerging market growth from 3.9 to 3.7% according to our last global outlook update at the Conference Board. Still, consumers in several markets, including India, Brazil, and Mexico, remain confident. In India, farmers and the middle class will receive a support of nearly $14 billion from a pre-election budget, although it will be at the cost of missing the fiscal target. Tightening labor markets in Brazil and Mexico are likely to support consumers as well. However, lower income growth and mounting debt are constraining continued expansion in household purchasing power in China. In addition, downward pressure on real estate and manufacturing investment will drag on China's investment growth. In India, despite some improvement lately, investors are likely to take a wait-and-see approach until the outcome of national election ensures policy continuity. Investment sentiment is improving in Brazil, but a positive outlook depends on the implementation of market reforms. Continued policy uncertainty has already fed into downbeat investment sentiment in Mexico. Finally, global trade growth has declined recently, with sharp declines in emerging markets. Export growth has fallen in China, India, and Mexico, and import growth has also dropped strongly in all the three. Trade growth is likely to slow amid uncertainty about a global trade dispute and rising protectionist sentiment. With a weakening trade outlook, softening investment growth, and domestic policy uncertainties, strong consumption growth alone is unlikely to prevent a more moderate growth in emerging markets in 2019. I am Abdul Erumban, and this was your Economic Watch brief for emerging markets.